0.70%. 65% 4.5%. A. 55% 40500 0.3% 0.8%. 7400750070%. Tight 8/ZH. N. Good morning, everyone, and welcome to today's market analysis. The global markets are currently exhibiting a complex and divergent pattern, with overall sentiment leaning towards risk-off. Looking at the key data, while the VIX index, a measure of market fear, has dropped to a low of 16.82, the U.S. 10-year Treasury yield has simultaneously declined to 4.48%. This clearly indicates a flight of capital into safe haven assets. Conversely, the commodity and cryptocurrency markets have experienced significant sell-offs. For instance, Brent crude oil has fallen below the $95 mark, settling at $93.24, and WTI crude has dropped to $89.45. Bitcoin is nearing its previous low of $73,000, and Ethereum has lost the critical $2,100 support level. This unequivocally shows that risk assets are under considerable pressure. We anticipate today's market to continue in a volatile and slightly weaker trend, with a probability of around 65%. The primary axis of capital flow is very clear, it's shifting away from higher-risk assets such as commodities, cryptocurrencies, and cyclical stocks, towards safe havens like U.S. Treasuries. Simultaneously, the policy-driven Chinese new energy sector is attracting substantial investment. Reflecting on the Asian session, China's A-share main board indices saw a decline, with the Shanghai Composite breaking below 4,100 points to close at 4,093.73, down 1.25%. However, the Chi-Next index bucked the trend, closing up 0.07% at 4,045.77 points. This suggests a structural reallocation of capital primarily driven by domestic investors. While foreign capital flowed out of CSI 300 components, there was a noticeable inflow into the new energy sector. We project that the European session will likely continue this risk-off tone. If U.S. equity futures stabilize by following the downward trend in U.S. bond yields, markets might find temporary relief, but expectations of further Federal Reserve rate hikes continue to suppress risk appetite. Therefore, the capital flow from Asia to Europe is highly likely to maintain its risk-off stance, with a 70% probability. From a macro driver perspective, on interest rates, the 10-year U.S. Treasury yields descent to